Hello, everyone. This is Mohammed Akif with Akif CPA, and today I'm here to talk about Canadians selling into US. More specifically, I'm talking about Canadians selling online, e-commerce, through Amazon, through Etsy, through Shopify, or even their own company website, their own sole proprietorship website into US. What happens with the US tax law? What forms are required? How this can be reported? And then what needs to be done if you are selling through a US LLC, which is a big no-no for a Canadian. So we'll be discussing a couple more topics. We'll be discussing ECI. We'll be discussing PE. ECI is effectively connected income. PE is permanent establishment. What are the rules for those? And then how reporting is the US reporting is based on those rules. So if you are a Canadian sole proprietorship, if you are a Canadian corporation and you are selling from Canada online into US using Amazon, using Shopify, using Etsy, using your own personal website or company website, there are tax filing requirements on the US side. All right, so that doesn't mean that you have to pay tax. That means there might be a reporting requirement, and then might have to claim tax-free benefits not to pay tax. And then we will see how the US taxes based on what is happening on the US side when you're selling. So, do you have ECI, which is effectively connected income? Do you have permanent establishment or have an office? Examples, all those stuff we'll be discussing. And then we'll be discussing if you're selling as a sole proprietorship into US online, Canadian as a Canadian into US online, what forms are required? If you're selling as a Canadian corporation, what is required in terms of the filing, reporting, and then if you're selling through US LLC, if you are a 100% owner of a US LLC, what forms are required to, and then why this is a no-no. We'll discuss that into detail too. So I have many other blogs that I've done for Canadians, specifically related to businesses who are selling, who want to sell, who want to establish in the US. I've done many blogs on those video blogs, online blogs. You can go to our website, check them out. Check them out on YouTube too, and then reach out to us if you have any specific questions, because everyone's situation is different. Every business is different. Every process is going to be different. So don't assume that what you read online might apply to you. Things might be different for you. So reach out to us with any questions. We're here to help you. We can help you set up in United States, help you understand how to set up in the United States, what makes sense for your business, for you, when you are trying to do business in the US. So without any further ado, let's get started. So let's talk about. I want to get some certain things out of the way, and then that's main things are when you are selling to US. What we have is called ECI, and what is ECI? ECI is technically effectively connected income. That's what ECI is. So ECI can be any income related to any activity in the US, that can be considered a trade or business. So any income sources through any activity that is derived from US sources can be considered a trade or business. And then the motive is for profit seeking. So technically, when you are selling, of course, that's what we are doing. The motive is profit seeking. So if you are selling from Canada into US, excuse me, so most likely you have an effectively connected income, because you are selling to a US person for a profit. So that's what ECI is. And then majority people who are selling as sole proprietorship, selling through a Canadian corporation, will have ECI. The next thing is permanent establishment. Do you have permanent establishment or not? A permanent establishment is a big, it's a broad area. There is no one rule that says this is what it should be and this is what you'll be considered. So I'll give you some general information. Again, your situation might be different. You might have specific issues or business operations or business dealings that might consider a PE. For example, let's say if you establish an office in any state in any of the 50 states, you will have PE. You hire an agent to do business on your corporation behalf or your business behalf. That is considered a PE. That is different from a independent person that you're hiring to sell your products. Again, this is agent specifically hired to act on your behalf or the corporation. That will make you a PE, that will establish you as a PE, a permanent establishment. For or let's say you set up an office, and we discussed that you become an agent, or you sign a contract. Signing a contract while physically present in the U.S. establishes PE. That's a one big one that a lot of people don't know about. So this is some of the few examples in day-to-day business activities that you might come across. What is not considered PE? Having a warehouse in the U.S., advertisement that you're doing in the U.S. Again, hiring agents to sell your products, not on to act behalf on your company, to sell your products, independent contractors. These three are not considered a PE criteria. So in summary, I'm going to share my screen with you so you can see what I am seeing, and then we can be all on the same page. Uh, Window. All right, so let's get this going. Let me get my picture. Let me make it a little bit bigger so you can see me better too. I don't want you to be losing me. Okay. All right. So ECI, if you sell your product in the US and you use a different supplier logistics, you'll be considered again. That was a summary. This is a summary of discussion that we were doing. PE, any employees, any agent, if you have an office, that is all considered PE. So that's all considered PE. So make sure that you understand what is the difference between ECI and PE. And then the tax filing is based on what do you have going on. We have ECI going on only, again, different forms. You have ECI and PE, different forms. Different forms for individuals selling into the United States. And then different forms for US Canadian corporations selling to the United States. So let's get to those forms. So if you are a sole proprietorship in Canada selling into the US, these are the US tax forms required you to file in the United States. If you're a sole proprietorship selling online, e-commerce into the United States through any Amazon, Shopify, Etsy, you name it, any of those platforms, you will have tax filing requirements in the US. So it's all based on if you have ECI or PE, or if you have both ECI and PE. So let's talk about what forms on the US side will be required. So if you have neither ECI nor PE, I mean, that's an easy one. No forms are required. I mean, you don't need to file. If you only have ECI, then US Form 1040 NR and Form 8833 is required. All right. So this is if you are selling as a sole proprietorship. Remember that. So if you're selling as a sole proprietorship into United States as a Canadian, if you have both ECI and PE, only 1040 NR is required. You will report your business income, and US will tax you on that income once you have PE. The reason we have the 8833 form, the 8833 form is a tax-free form. Technically, what we are saying, if we only have ECI, is that we are a non-resident. We have a beautiful Canada and US tax treaty, which says that only if we only have ECI, we're only paying tax to Canada. We're not paying tax to the United States. And then in order to claim that benefit, you have to file Form 8833. So again, 1040 NR and 8833. So in order to file a 1040 NR, you need to have a ITI number. That is a separate issue. But without a ITI number, you cannot file 1040 NR. In order to apply, there is a process. So the first returns are always going to be a difficult one for sole proprietorships selling into United States. Canadian forms are relatively simple, T1 and T2, 125, if they are excuse me, if you have sole proprietorship on the Canadian side, this is the same form for individuals. So sole proprietorship, this is not Canadian corporations. These are not Canadian partnerships, any of those. All right, so let's get to the next one. Tax filing requirements for corporations. I want to make sure that, let me just, okay. What happened to my screen? All right, so I can see this. Okay, so a Canadian corporation selling into United States online, e-commerce, through Amazon, through Shopify, through Etsy, any of those platforms. If you have, these are the forms that are required, the IRS form. If you neither have ECI nor PE, again, you don't need to file. If you only have ECI, effectively connected income with through the in the US, when you're selling into US, you have to file Form 1120F and Form 8833. Again, the same concept. ECI, US will tax you unless you claim tax-free benefits. If you have it, you claim it. We have a treaty between US and Canada that you can use to pay only the taxes only in Canada. Make sure you file the Form 8833 along with 1120F. If you have both ECI and PE, then 1120F form will be required. 1120F form will be required. So that means any income that is derived from the United States sources, US will tax you on it through 1120F. Again, there might be a branch profit tax you, but we have an exemption up to a certain amount from branch profit tax. If you are filing 1120F, technically that you will become a branch on the US when you're selling, and you only have to file 1120F. Otherwise, if you have only ECI, which majority of guys you will do, you will not have to pay taxes in United States. You will have to file only Form 1120F and Form 8883. File those form every year and make sure you are in compliance. Now let's get to the one of the main problems that we have for Canadians. A US LLC, which is a no, a big no for Canadians. So a Canadian who owns a US LLC, the problem is not on the US side. That's not the issue. The issue is the Canadian side, the CRA, because the CRA looks at a US LLC as a corporation, whereas on the US side, LLC is considered a pass-through entity. What do I mean by pass-through is that the LLC does not pay any taxes. It's the owner who's responsible to pay the taxes. That means the personal side is liable. Your individual person is liable, or any company who owns LLC is liable to pay taxes in the United States. This creates a problem. This creates a double taxation scenario for Canadians, because on the Canadian side, the CRA is looking at this as a corporation. So I'll give you an example. So for example, let's say a US LLC owned by a Canadian, could be a corporation, Canadian corporation, could be a Canadian person, makes $10,000 in profit. On the US side, since it is a pass-through entity, the US person, the Canadian person or Canadian corporation will be responsible to pay taxes. Now, for example, you say, oh, I have, out of the 10,000, you pay tax to the United States, you get done, 2,000 is a tax, 3,000 is a tax, doesn't matter, and then you get done. And then now you move to the Canadian side. So on the Canadian side, the CRA is looking at this as a corporation. So on the 10,000 that you have made, you have paid tax on it, right? So that amount will not be reportable. What is going to be reportable is that how much money did you take out from that 10,000? How much profit? From that profit did you take out? So for example, out of the 10,000, you take out 5,000. On the US side, there is no tax on taking out that money. On the Canadian side, that will be considered a dividend. This is one of the examples. So what happens? 10,000 on the US side you pay tax on, and this 5,000 dividend. On the US side, there is no dividend. There is no such thing as dividend. So now you have a dividend, and then we have a profit. You're paying tax to the United States on that profit, and then you're paying tax to Canada, so CRA, on that dividend. Double taxation. So that's one of the reasons when a Canadian person owns a US LLC, and then that US LLC is considered a disregarded, then we get into a double taxation scenarios. The only way you can get rid of this is if that US LLC becomes a corporation for US tax purposes. That means a corporation on the US side, corporation on the Canadian side. And that's the only way that US LLC can work for a Canadian. Other than that, you are in a pickle. You're being double taxed. We have other issues too that I don't want to discuss. That would just make this video very long. But again, problems and problems, and it's not going to get easier. So make sure that you get somebody to help you, because US LLC for Canadian, initially, if you don't understand US laws, you don't understand the Canadian laws, then it will become a problem. Okay, so what if you have only ECI? If you have a US LLC, then you file a 1040 NR, 8833 and 5472. If you have neither ECI or PE, you file a 1120F pro forma. I'm sure a lot of guys have never heard of pro forma forms. You guys haven't heard of those. And this is a special type of form that needs to be filed. And 5472. Again, the 5472 carries a penalty of $25,000. That if that form is filed late or is incomplete, that's a big penalty. $25,000. That's a big penalty. So make sure that you guys understand that USLC for Canadian is a no joke. It's a no joke, because we are getting to it in a situation where we're dealing with huge amounts of penalties. Unless you understand how this can work for you, don't get into it. Don't get into it. Understand it. Understand how this is going to impact on the US side of the USLC. Understand how this is going to impact on the Canadian side, and then file it. So if you have both ECI and PE 1040 NR, of course, paying tax on, and then a 5472, the same form. The reason we have T2 for Canadian is because it is considered a corporation. That's the reason we have it. All right, guys. So let's get into the due dates. So due date is individuals. If you are living outside of United States, the due date is June 15th. If you are a corporation, of course, it's whenever the 6th month, 15th day of the 6th month when the fiscal year ends. So again, if it's a December 31st, then you have June 15 too. We do have extension on the Canadian, on the US side. So if you have ITIN, or if you have a tax ID number, a US tax ID number, then make sure you get the extension, because the extension will give you additional time to file. I always tell my clients who have foreign reporting requirements, or who are outside of the United States, or who are Canadians, when he has US obligation filings, to get an extension. It costs you nothing, but it can get you time. It can save you a lot of penalties. So make sure you file the extension form. So again, so this video was about Canadians selling into the US through Amazon, e-commerce, understanding ECI, understanding PE, what are the forms required, what you guys need to do, what you need to stay away from, of course, the US LLC. Stay away from those unless you understand it. And then what are the due dates? Any questions, reach out to us at info@keepcpa.com, and we'll be gladly helping you. We get a lot of leads from Canadians trying to understand. Some of them are in trouble. They didn't understand. Someone told them on the US side, hey, you need to get this, you need to get this. Get an LLC to buy from us, or get this to buy from us. And then they set up this LLCs without understanding what is happening. So I don't want you to be in that position. I want you to understand and then make the best move when it comes to selling online. Make sure you keep your cross-border taxation simple, easy, manageable. Talk to you soon.